Hello, this is Nataraja Upadhyaya. Welcome to yet another session of Top 50 Mutual Fund Analysis. And typically, this is done on a timeline of monthly basis, but the time keeps moving. So, this exercise is done on a weekly basis so that you do have a pulse of mutual funds market on a weekly basis. So, let us get on with the presentation. This presentation is already available as a blog. This video is for those who would rather view and listen rather than read. So this is for the week ending on August 16th, 2024. So let's start with the summary of returns by various mutual fund types. Here, entire mutual fund average, there was a positive return for the week. However, the monthly return is negative. So what it tells is that last 1 month, the equity markets are in general have been correcting. Still, the entire mutual fund universe is at a healthy 27.28%. What it means that your random investments in mutual funds, if they should return at least this much as per the current market conditions in the last 1 year. If it has not, that means there is scope for further homework for you to tune your mutual funds. Let us look at the equity funds because they are the most important. 878, more than 50% are equity funds. How they have done? Let us look at the average. 0.91% means last 1 week was a recovery period for mutual funds. However, the uh, equity funds still in correction mode when you take the 1 month basis. However, it looks better on a 3 months or a 6 months basis, and on annual basis 40.59% for equity funds, most of which has come in the earlier 6 months because the latest 6 months only 15.91%, less than half of 40.59%. That means mutual funds golden days are way behind is what we see. Now let us look at some other numbers. Top 50 is all about going behind the winners so that your overall return on mutual funds will be high. And on a weekly basis, we sense the top 50 leadership. So on a monthly basis, on a weekly basis, 2.25% correct improvement is far better than the overall average. On a monthly basis, 5.62% improvement is far better than the correction of overall, and 18.41 compared to 10.53, 14.17 compared to 15.91. What does it tell you? What it tells you is that the current top 50 leaders are those who did not do well uh, either on 6 months basis or on an annual basis. So they just match with the annual percentage of average. See, being top 50, you should have far better annual return. Why it doesn't? Because there is a new leadership. That means traditional leaders are not doing well, which becomes clear when you look at top 50 based on 1 year basis. See, this top 50 last 1 week improvement is less than average, and the 1 month return is way negative. And however, 6 months return is better. What it means is that top 50 leaders on an annual basis have been consistent in last 6 month return, and their annual returns remains very good, 71.92%, though the best days had 80 plus returns. Now, the bottom 50 tells you the intensity of correction. Bottom 50 on 1 month basis minus 6.18%. So, see, you can lose that kind of a percentage in some of your mutual funds, though there has been an improvement, a recovery in the last week. Even the bottom 50 for the 1 month basis gave you 31.70% because that bottom 50 has some good mutual funds stuck there. Bottom 50 mutual funds on a 1 year basis, they also corrected not as much as the bottom 50 on a 1 month basis, but their annual return is very subdued, 8.74%. So your hope is that none of your portfolio mutual funds are stuck, here. That is the hope here. Looking at the hybrid funds, see, the hybrid funds is a various combination of equity and debt, and in some cases it's also commodity. When we say commodity in India, it is only gold and silver funds which are available. No other commodity types are available in the commodity funds in India. So whenever the equity does bad, that is, since the majority of the leaders in hybrid are equity based, they will also do equally bad. So, however, when there is a correction, the correction will be a bit subdued compared to equity because of the debt portion, which always has a positive return, though the return is very low. So let us do the apple to apple comparison. Top 50 equity did 5.62 for the month, and here it 1.07 for the hybrid. Top 50 for the annual basis gave minus 1.68% in the last 1 month, and here it is minus 0.1, which is very subdued even on the negative basis. So both positive and negative returns are going to be subdued in hybrid funds. On average, the hybrid funds were positive even on a monthly basis, though the positive return for the week is subdued compared to the equity funds. So this is a typical behavior. So now let us compare the hybrid and equity. On a monthly leaders, it is 40.50 equity, 22.89 hybrid. On an annual top 50, it is 71.92 for equity and 34.69 for the hybrid. And overall, equity is 40.59 and entire hybrid mutual funds is 22.03. So this is a typical ratio between equity and hybrid that has been maintained. Debt funds, there are 486 debt funds. Typically, it gives a bank interest kind of return. Annual return is around 8.06. Commodity funds, they did recover a bit this week, but the accumulated losses through the month is significant, minus 7.18, which has carried to the 3-month loss, and 6 months still positive, and annual is 17.45. And most of that gain of annual gain has come from the last 6 months. That too, the first 3 months of the last 6 months is what we can gather. Now let us move on to monthly top 50. See, monthly top 50, you know what is green and what is yellow here. Green is one where the fund has above average return in all timelines from 1 month through 1 year. Yellow is the one which has above average return in all timelines except for one. Therefore, when it comes to investment decisions, green are the safe bets because of the consistency of the returns, though they may be bit subdued when compared to the ones in the top. So here, let us look at the top one. HDFC Pharma and Healthcare Fund has been doing well in the last 2 iterations, but this time it is subdued because somehow its 3 months return is below average. Okay, that may be because its monthly return may be a bit slowed down compared to last week, and 1 week return has been negative. That is the reason. So this 1 week return can cause havoc in the other return percentages what you gather. So the green ones are the ones to focus. Mirae Asset Healthcare Fund gave 7.44% for the week, for the month, and 47.47 for the year. UTI Healthcare Fund 7.43 for the month, 47.46 for the year. ICICI Prudential Pharma Healthcare and Diagnostics Fund 7.03 for the month and 53.81 for the year. HDFC Technology Fund 6.73, and there is no return for the year because new fund. UTI Innovation Fund 6.70, and there is no return for the year because it's a new fund. Kotak Technology Fund 6.62, and it is a reasonably new fund, and 3 months return itself is very impressive, 24.04. So the new names that are emerging, last 2 weeks, healthcare funds were dominant. Now the technology funds are trying to take that seat. So the good ones, ICICI Prudential Pharma, Healthcare and Diagnostics is good because it is comparable on a monthly return, but better annual return is there. HDFC Technology Fund and Kotak Technology Fund and UTI Innovation Fund, all three are worth considering for fresh investments as a result. So that is for the monthly top 50. Now we are coming to the monthly bottom 50. Why do we look at monthly bottom 50? It is to sense any bearish reversal on certain leading mutual funds. So how do we do that? We look at annual average, above annual average within this list by marking it bold black. Then we look at below average within 1 week return and 1 month return. So any fund that has above average annual return and below average return either on a monthly or weekly basis is identified and marked as bold red. And some notable ones are this HDFC Defense Fund, though it has 101.08% return for the year, it is still in a correction mode. So concern. So in fact, there has been a consistent correction almost for last 4-5 weeks. Then I will go by only big, return ones. Invesco India PSC Equity Fund is still in correction mode, though still it has 85.14% return. Then Quant Infrastructure Fund is in correction mode, still with annual return of 70.93%. And there are many in the 50% range. So the names, if you look at that are in blank, are in bold red, are the PSU Bank ETF, Infrastructure Fund, Commodities Fund, Nice Bank and ETF, Housing Index Fund, BFSI Fund, even a Quant Mid Cap Fund, Quant Infrastructure Fund. So there is a concern as to the traditional annual leaders are still struggling to keep up with their performances. So definitely not worth considering for fresh investments, and hold decisions is going to be a question mark because already a lot of gains have been lost. So it may be a bit too late to sell now. So you just grin and bear and hope for the better situation to return for these traditional annual leaders. Now we are coming to the annual top 50 because mutual fund investments are anyway for a longer term. So we would not limit to only monthly returns. So we look at even annual returns. So from an annual return perspective, the one in the green are consistent performers. CPSE ETF, LIC MF Infrastructure Fund, Bandhan Small Cap Fund, Kotak Nifty Alpha 50 ETF. Now among these green ones, highest is CPSE ETF at 113.48, though there has been correction in the weekly and monthly basis. LIC MF Infrastructure Fund also corrected on a monthly basis and trying to recover. Then Bandhan Small Cap Fund is interesting. It has a very decent annual return, 74.14%. And among all this confusion, it has a positive return for the month and the week. So it is a good bet for further investment. That status is still maintained. Kotak Nifty Alpha 50 ETF, again corrected on a monthly basis, but has a decent annual return. So I would invest in Bandhan Small Cap Fund again this week. So see, the purpose of this top 50 analysis is to go ahead with the leaders, with the consistent leaders, so that your overall return becomes better on a portfolio level. So when you find a gem like this, you hold on to it until the signals change. For example, the one change in the signals is HDFC Defense Fund being yellow. I would avoid it because of minus 9.01% correction, and maybe the correction may be slowing down, but still you want positive values here, right? Then what else is there? Now, let us look at Invesco India PSU Equity Fund. It is third in the list with 85.14%, but doesn't get any color because it is negative for the week, negative for the month, and it has below average returns both on 3 months and 6 months basis. So it has lost its momentum. So at the best, you can hold on to it, but you don't want to buy now. So that is the clarity you get from this list. So look at it carefully, both on fresh investments and your hold and sell decisions. Now, the equity annual bottom 50 is not as much useful as monthly bottom 50 because annual bottom 50 is used for bullish reversal. Here, bullish reversal needs to have at least above average return on a weekly basis or a monthly basis. And now I have added one more condition that let us wait for this reversal to be consistent so that these reversals reflect on above average annual return within the list. So that is a recent refinement I have made. So as a result, the ones that are marked in bold black are those which are potentially a bullish reversal signals. In no way they are investment candidates. So here we are looking for a particular pattern that is emerging. And that pattern, if you look at it, it is nothing to talk much about because they are anyway all underperformers. But what it tells is that a lot of private bank ETFs, Nifty Bank ETFs, the banking sector is still in the annual bottom 50 and still not showing the reversal sign, right? Whereas last week it kind of showed a reversal sign, but it lost through this week. So that's a bad news for the banking based mutual funds. Now we are coming to hybrid monthly top 50s. Hybrid monthly top 50, there seems to be some churn out because of the equity correction. Now the one in green are Bandhan Hybrid Equity Fund, annual return 29.75, Axis Retirement Savings Fund Dynamic Plan 40.29 for the year, Axis Retirement Savings Fund Aggressive Plan 37.74%. So here I'll just pause. See, it is a good sign here that a dynamic plan became better than aggressive plan because of the correction in the equity. That becomes clear here. And which means that the equities, whether the correction is over, is there a rebound ahead? It's a question mark. NJ Balanced Advantage Fund, annually 33.69, Axis Equity Hybrid Fund 26.35, Axis Children Gift Fund 23.77, UTI Multi Asset Allocation Fund 41.26%. Okay. Now the top one, SBI Magnet Children Benefit Fund Savings Plan, is now moved to orange because it lost on the annual return level. Okay. Motilal Oswal Balance Advantage Fund also has lost on the annual average percentage. DSP Equity Plus Bond Fund was a darling last week, but has lost out on the monthly return. Okay. Then Franklin India Equity Hybrid Fund lost on the monthly returns. Tata Hybrid Equity Fund lost on the monthly returns. ICICI Prudential Equity and Debt Fund lost on the monthly returns. So JM Aggressive Fund also lost out on the monthly return. So this tells you some kind of a churn out in the leadership is what I am trying to impress you upon. Now we are looking at hybrid annual top 50. The list should be reasonably stable because it's done on an annual basis. However, the top one, Quant Dynamic Asset Allocation Fund, though it has 56.72%, did not get any color because monthly basis it's negative, 6 months returns are below average. The one in green are JM Aggressive Hybrid Fund with 53.54%, Bank of India Mid and Small Cap Equity and Debt Fund return 47.59. You may wonder why there is no monthly return marked. This could be simply a data error on the part of the fund house or the value research. So we are giving the benefit of the doubt and consider it as positive. Okay. Next, Axis Retirement Savings Fund, 40.29% for the year. Invesco India Aggressive Hybrid Fund, 39.11. Mahindra Manulife Aggressive Hybrid Fund, 37.81. Axis Retirement Savings Fund Aggressive Plan, 37.74. Edelweiss Aggressive Hybrid Fund, 36.88. So the two in yellow top, SBI Magnum Children's Benefit Fund Investment Plan, got a negative return for the month. UTI Multi-Asset Allocation Fund got negative return for the last 3 months. So that is the highlight. Otherwise, typically this list is kind of stable. Now, lastly, we are discussing commodities funds. Commodities funds corrected heavily on the monthly basis, but recovery is there on a weekly basis. The one in green are Kotak Gold ETF, Aditya Birla Sun Life Gold Fund, UNESCO India Gold ETF, UTI Gold Exchange Traded Fund, HDFC Gold Exchange Traded Fund, LIC MF Gold ETF. The best annual return, if you notice, is in the range of 19 plus, right? And the best monthly return is in the range of minus 3.16. So why do we look at green status even when the monthly return is negative? It's simply because if the correction stage is over and you want to consider reinvestment, then starting at a corrected stage is a positive for you. So if you believe that commodities will improve further, these green ones could be your bet choice. See, gold, Zerodha Gold ETF has been coming in green for a while, and it's a reasonably new fund. See, reasonably new funds have an advantage because they tend to not have baggages from a longer period like 6 months and 1 year. So if you are a short-term focus, sometimes a performing new fund can be your good bet like Zerodha Gold ETF here. So that is about commodities. So with that, we are coming to the end of our conversation. Standard disclaimers apply because there is no solicitation here. And you can always go to my blog for detailed analysis line by line. You can look at all my bulletins on various social network platforms of mine. So with that, I am coming to end of this bulletin. See you next week. There will be a special bulletin coming on hybrid funds, and that blog is already out. You will see a video soon on that one also. Thank you so much.